Hi, Charlotte. Welcome to with Grace for Life.
Hi, Grace. So great to be here with you. Thanks so much for having me.
Amazing. Okay, one second. I'm so sorry.
I've never been live before, so this is exciting.
Okay, perfect. So yeah, like I feel like I do like I feel like I make everyone go through a life situation. It's like always everyone's first life anything. But okay, so thank you so much for taking the chance. And anyway, so to give the audience a little bit of your background, you have worked at Goldman, NEA, and Inspired Capital. Actually, like one of the things on your portfolio, like on your experience, I'm just like so fascinated about is like Tamara Mellon. Because I actually read her biography.
Oh, cool. Yeah,
Yeah.
what is it? Is it called what's it something what's the title of it?
I forgot the title, but I remember she was talking about like how she like joined the founder of Jimmy Choo and then how she kind of like grew the brand. And she was like, okay, so this may be like, I don't know, maybe this is like not the fact or like truth or whatever. I discovered it from like the CAA founder's bio. And then in the end, he mentioned a little bit about like maybe he was like dating her or something. I don't
Yeah,
quite
they're
remember.
married. She's married to Michael
Oh,
Ovitz.
okay. Yeah, yeah, yeah. Okay.
They
So
were.
and
I don't
that
know if they still
like
are.
I bought like the recommended books, which is her book. So
Oh,
yeah, like it
funny.
was such a really random situation. But what was working there like? I didn't know that was an NEA portfolio company.
Yeah, yeah. So, I mean, I was only there for 3 months, so I don't have a ton to share. But basically, as a background is that I was at Goldman. I was lined up to start at NEA in the fall.
Mhm.
And I was just kind of like itching to do something different. Like I had been at Goldman for 2 years and I wanted to just kind of move on to my next thing. And so felt like it was a cool opportunity to maybe leave a little bit early and join a portfolio company and really understand what it's like to be on the operating side, which I think was really helpful because I joined Tamara Mellon at a time when it was like pre-launch. It had like 3 employees,
Wow.
very different from Goldman, obviously. And so it kind of gave me a sense of like, or gave me a little bit of um, a eye into kind of like how founders kind of do their day to day and how it's kind of one of those things where it's like choosing to do one thing means you're actively choosing not to do another thing and how allocation of resources is so important in early days. And so it was definitely a nice way to kind of start my early stage investing career.
Totally. I guess like I wonder, besides like the founder time or like resources allocation, like is there some like major learnings that you've took away as like later on you went into the investing world that you feel like it's really beneficial?
Yeah, I mean, I think it was just having to, at that point in time, right, they were figuring out supply chain issues. They were figuring out packaging for the shoes. They were figuring out hiring needs. So it was like literally all hands on deck for every kind of initiative. And so, and like kind of understanding like what's the software stack that we should use for these things? Like, how should we set up our internal systems? Like, what should be best practices here? And so I think just realizing that like startups are just very early on, just kind of like very much an all hands on deck effort.
Totally. Okay, so let's like talk about I feel like, in NEA you have built a pretty good track record. You have invested in Duolingo, Mejuri, the Wing. And why don't we talk about like, what were some core lessons that you've gained early on in your career that kind of shape you into like a partner at Inspired Capital?
Yeah. Yeah. I mean, NEA was a fantastic place to kind of start my venture career. It's been around, I mean, probably for now almost close to 50 years. And so, when I joined, it was a place where, one of the few places that had an associate program. So this was back in I joined in 2016. I got the job in 2014. At the time, there wasn't really a venture capital ecosystem on the East Coast. And I'm from New York. And so it was important to me to kind of stay out here.
Mhm.
Um, and so I joined NEA in 2016. And it was one of those things where it's like day one, you get there and they're like, okay, you're on the board of these 4 companies. And I had no idea. And I was, 24 years old. I had no idea what it meant to be a board member. Um, and I had no idea really what that entailed. So luckily, obviously, like ton of mentorship, a ton of just like observing kind of dynamics on boards and understanding how, different investors interact and like what's important to some and what's important to others. And so, but it was a really, really cool experience to just kind of be thrown in at once. And yeah, I mean, I think, you know, um, lessons I've learned. I mean, I think the other cool part about NEA is that like, you know, just being able to every Monday we would have new companies kind of come through the door and just pitch us their vision. And so the pattern recognition of just seeing founder after founder who was really kind of at the finish line of our process, um, and just tracking kind of one to the next and understanding kind of like why we were choosing to make an investment, like all of those things I think really compounded over time to kind of give you that muscle around like what are you looking for in a founder. And I think um, you know lessons, I mean there's so many lessons. I would say some of the biggest lessons I learned, I guess specifically with Duolingo,
Mhm.
right? So that was a company that I joined the board of right as they were starting to monetize. So, we had invested and they had gained millions of users and a lot of activity on the app, but like there was a real question around like, will people pay for this? Um, and so they turned on the subscription, kind of thinking like, who knows? Because it was like a freemium product. And then slowly, obviously, the revenue took off. And I just really distinctly remember a board meeting when I think they were around like 10 million in revenue. And the CEO kind of got up in front of everyone and was like, got to hire a CFO. Like, we're taking this company public and on and on and on and on. And I remember sitting there thinking to myself, like, oh gosh, this has a long way to go. But like, he was so convicted in his vision and he just saw where it was going. And it was really, I think, a reminder of like just really trusting the entrepreneur and like really kind of believing in their conviction and how important that is. So that was a pretty cool moment.
For sure. I feel like okay, so I wanna double click on the associate program as well as like
Yeah,
the Duolingo board member experience. So in terms of like so basically you were saying like when you join NEA, then like people kind of assign you guys to like a certain board
right.
seat. That's pretty crazy. I thought you have to be like a lead investor of like a certain rounds or something to be a board member of a certain
Well, the
company.
thing is, NEA, like, there's just so many companies that they kind of are like, we need people managing them, and like our partners are too busy, so like you're this associate, go. Sorry, yeah, sorry to interrupt.
Do you gotta pick, like, which company you wanna be a board member of, or, like, do you guys just be
Yeah,
like,
so
"Okay, you go for this," kind of thing?
yeah, so I mean, I think that you do have, so like for example, like there were a couple of companies that I was like more actively involved in
Mhm.
sourcing and working on the diligence. So you can kind of definitely put your hand up and say, "Oh, this is an interesting one that I want to be a part of pre-investment." And so that kind of sets you up to like be there when the board seat kind of comes available.
Got it. Okay, so let's say because you are on the board of some really interesting companies like, Duolingo obviously is one and the Mejuri. So, like, I guess, like, how frequent does, like, the board meeting happen? And I guess, like, what are some kind of decisions that you would help the portfolio company kind of, like, make?
So I was involved with those companies when I was at NEA, but then when I
Mhm.
transitioned to Inspired, I no longer am part of
Like
those
yeah.
companies. So I'm no longer, a part of the Duolingo
Mhm.
board at all. And Mejuri was an investment that I kind of sourced, but I wasn't there on the board because I ended up transitioning over to Inspired.
Mhm.
But I'm on several boards here at Inspired. Um, and so yeah, I mean, I think, we kind of meet on a quarterly cadence basis as like a formal board, but then,
Mhm.
monthly kind of check-ins, obviously with the founder kind of tracking certain KPIs and then, what often happens is it ends up being a quick phone call here and there, text here and there about certain things um, on a more frequent basis.
I wonder, so I mean, like from my venture career, I've never been like in like have to like I guess like I've like frequently communicate with founders, but like I've never got to a situation that I feel like there is a I guess like would you have like a set KPI for the founder, or like the founder is more in like the dominant position of like they would like have their own KPI and like it constantly like changes? I wonder what's your experience on like,
Yeah.
being a board member, helping the guiding the founder through some like really interesting like decisions for the company.
Yeah, I mean, I think the best founders that I've worked with are the ones who don't need us, right? They're the
Mhm,
ones who run really independently and are kind of like,
mhm,
"Hey, by the way, like here's a really thorough update on our business," and they cover everything from like, market trends to metrics to hiring needs to things that are going well to things that aren't going well. um and people who, and I think also people who can just like hire on their own and hire
mhm,
really high quality people. So for the most part, I think we want our founders to act independently, and we're here, when and if things happen that they need more support on. So examples include like my co-founder's not working out and I need to replace him or her. Um, it's a lot of,
mhm,
I think a lot of the times when the board comes involved, it's like around people issues
mhm,
that are more just sensitive and harder to manage. And as a founder and CEO, you might feel really isolated in that issue
mhm,
because they're people that you've probably been with since the beginning, and so it's hard to manage that, and so the board can be a real ally there.
mhm.
Um, but yeah, for the most part, I would say, the best founders are the ones who don't need a lot of handholding and don't need to be told kind of what their KPIs are. They're the ones that just kind of come out and they're like, this is what I think, this is how I believe we need to run the business. This is what I kind of am coming to you with in terms of my kind of most urgent issues. And so that's kind of what I like to see.
Totally. Okay. So since like you've been at Inspired Capital for over 5 years and you're a partner here now, and I wonder, let's talk about like first, for like the audience who like are just getting to know Inspired Capital. Why don't we talk about like what do you guys focus on? I know you guys are a generalist fund, and like why don't we talk about like the investing approach here?
Great.
And
Yeah. Yeah, so I mean, I guess to give you a little bit more background on Inspired, so I joined right at the beginning, so I had gotten to know Alexa Von Tobel, who was the founder and CEO of a fintech company called LearnBest that she sold back in 2015, and she, kind of became a mentor of mine back when I was at NEA. Really kind of admired her and her ambition, and we kind of caught up in 2018, and she explained to me her vision for Inspired, which was really like building kind of almost like a USB 2.0 classic early stage venture firm based in New York that was generalist and like intentionally concentrated portfolio.
Mhm,
She brought on Penny Pritzker as her co-founder, and obviously Penny, sits on the board of Microsoft. She was Secretary of Commerce under Obama, and like her reach is pretty incredible. When it comes to just like connections with important kind of people in various companies. Um, and so I felt like it was a real opportunity to join a fund from the ground floor. I had seen someone was a year ahead of me at Yale who like had joined Thrive early on and like had ridden that, and I felt like it's a once in a lifetime opportunity to join a fund from
mhm,
the beginning and be a part of it. And so was excited to join early on before we closed our
mhm,
first fund. And so our first fund was $200 million. Our second fund was 280, and we kind of like activated that in like early 2022 or late 2021. And then we just raised our third fund, which is 330 million. So all kind of similar-ish, fund sizes around 300 million, I would say. And that's kind of where we'll stay probably. And so, we lead rounds. We'll also co-lead, but we mostly lead rounds. We write checks ranging from 1 to 15 million, so that's a large range, but it really encompasses the fact that like we will do kind of a initial like napkin check into a company, early on, especially if we know the founder really well. Like those are kind of those situations. And then we can also lead a 15 to $20 million Series A, and then everything in between, which these days, I mean, seed is A, they're just so meaningless in some ways. And then, yeah, from a category perspective, like you said, very much generalist. I mean, we won't invest in kind of like biotech, and we won't invest in like D2C products.
Mhm.
But we do a ton in enterprise SaaS and healthcare and fintech and like consumer tech, and also doing more and more in kind of what we call like frontier tech.
Mhm.
Obviously, AI kind of penetrates all of that.
Mhm.
But that is kind of inspired in a nutshell, a very classic model around like reserving half the fund for follow on and all of that.
Totally. Okay, I'm taking notes. I listened to like your podcast with the Slice of Healthcare one, and then I also listened to
Oh yeah.
the founder of like Inspired on this like other podcast. But anyway, I know she has her own podcast too. So, and I wonder,
Yes.
yeah, let's talk about like, I know that you guys like to, let's say, lead tracks. And I wonder, like, when you are thinking about like portfolio construction, you mentioned like half of them you would save for like reserves. And would you follow the company until they IPO, or would it be more of like, would you like follow along anyone who would raise the next round of funding, or like what does the approach look like in terms of thinking about reserve?
Yeah, no, it's a really good question. I think something that we're also like actively like learning more about as we are approaching fund. I
Mhm.
mean, we're kind of coming at so fund one initial is like fully deployed. Follow
Mhm.
on, we are still deploying. Fund
Mhm.
two, we still have a few more companies to invest in. Fund
Mhm.
three, we haven't even activated yet. Fund one was started, so we turned it on at mid to end of 2019, which was an interesting period because as you may remember, like 2020 and 2021 was
Mhm.
just like a total crazy time. And so like companies, like we would lead a seed round, and then 2 months later, there would be a preemptive Series A
Mhm.
offer that would be like quadruple, like five times the valuation we just invested in. And so we were like posed this question of like, do we do our pro rata to maintain our ownership or not? Because like the reality is nothing has changed between the time we invested and the time that this new round come together. So those I think were lessons learned the hard way.
Mhm.
But typically what we're trying to get like 15 to 20% ownership upfront. So that's like a really important part of our model. And so to your question around like investing through IPO, like yes, we will and we want to. We do some of that like those later stage rounds like via SPV vehicles with our LPs that we're like very
Mhm.
grateful, who are like eager to support our companies
Mhm.
um, at Series C and beyond. And then in general, like reserves, like we're always really excited to support companies as they kind of go on to their next round, and so intentionally reserve a good amount of capital to be a supportive partner to them in their
Mhm.
next round.
Totally. For the high concentrated fats, I also have a few like questions on that. So, because
Yeah.
I feel like being in venture, like I think the most amount of advice I've gotten from people are like, oh, it's a index game. You go ahead and invest in like 40 companies, something will pop off in your portfolio kind of approach. But I wonder, like, so why concentrated bets, and then number two is like, how do you think about like, when the amount, like, I guess like when I chat with LPs, they would like to see, let's say, your next round of funding is like full on by like a famous fund or something. So like I
Yeah.
wonder, what's your thought process on like thinking about the liquidation, or not liquidation, but like the exit strategy, or like the next round of funding kind of things. um maybe it's an afterthought, you just identify something that's like really great early on, but like I guess like what's your thinking framework when you're making concentrated bets in a certain space?
Yeah, I mean, I think our model is like predicated on owning a lot of companies, and
Mhm.
so I think looking at the math, like we have we have in the past made a few exceptions where we, will own a smaller amount of a company based on a variety of things. Usually has to do with kind of like a personal relationship, or maybe we got to the round too late and we really liked the founder and we wanted to kind of have a front row seat to what they were building. But at the end of the day, like it's really hard to drive
Mhm.
meaningful returns for a
Mhm.
$330 million fund when you own less than 5% of the business, unless the business is really going to be like a Stripe or something like that.
Mhm.
And so I think just that framework is really important. It's like a lot if you own 20% of a company and you believe that it has the potential to, you know, be a $2+ billion outcome, like that's more achievable than owning, less than 5% of a company and having to believe a much, much, much larger outcome. So that's kind of how we think about it, and how our model works. Of course, you have a lot of funds that are more of a, I guess, spray and pray strategy. And, I think sometimes that can work, but I think historically, the best funds are ones that have really kind of like highly concentrated bets that really value and prioritize ownership up front. Um, and then your other question was on exit. So like
Mhm.
I think it's something that, I think USV has done this super well. Like they've
Mhm.
really kind of like, and I think Fred Wilson has like blogged about this publicly a lot, where it's like kind of taking chips off the table, right? And obviously it's not always done well. Like I think Coinbase is an example of a time when they probably shouldn't have taken chips off the table, but like they did, and then it ultimately was like ended up being a much much larger outcome. But I think for funds of our size, like understanding kind of when the right time is to kind of exit, or exit part of your position, right? Not all of it, but just part of it, is a really important part of the job. And I think it's different for different fund stages and sizes and all of those things, and also your portfolio construction and understanding kind of like what else in the fund, what's the timeline for other companies in the fund, and so it's something that, we as a younger fund, are kind of like actively kind of thinking through managing. And then, of course, you have to think through recycling dollars too, right? So if you have an exit, um, you know, like, or ideally you have an exit so that you can deploy some of that capital back into follow on to your strongest positions, right? Like, so that's baked into our model too, that we have and we will um, continue to recycle so that we can like defend our ownership position in a lot of our kind of key winners.
Totally. I wonder, so since like you guys are like mostly like female in the leadership team, and I wonder when it comes to like fundraising as a fund, is there any kind of like tips, or like I guess like is there any challenges that you'll be facing like that's like kind of like people would not be thinking about, or like is there anything that like any like tips or like like, in terms of like fundraising that you are able to like share with our audience?
Yeah, I mean, I have to say, like, so Alexa, the founder of Inspired, like, really has done a phenomenal job building a really strong LP base that will be with us for a long time, and also like kind of a tight LP base, right? So it's not a massive, like, a bunch of different names. It's like a really kind of like um, intimate base of LPs, which is what we wanted, of endowments and pension funds and those types of
Mhm.
things. Um, and I think a big part of our success has been just really like demonstrating some of the things that have been maybe missing in the market over the last few years, which I think are things like discipline, right? Um, Discipline around follow-ons, discipline around investment pacing, right? Not deploying your entire fund in 12 months, but really like being thoughtful about, a 3-year deployment cycle. Discipline around kind of like categories and theses, We've been, really, careful not to just like blindly throw money into crypto when crypto is hot and blindly throw money into generative AI when generative AI was hot. And I think that kind of, making sure like I think LPs really trust us.
Mhm.
And I think the other thing that was like always really interesting to me, right, as someone who was kind of like newer to the LP scene, because at NEA, like there's just a team that does that. And so you don't really see the LP side of things at a fund that's that big. But what always struck me about LP conversations, early on was like I went into these conversations really prepared to talk about my perspectives on the market and specific themes I was interested in and company details, like expecting them to be quizzing me on like the margin profile of one of our portfolio companies. And in fact, like the only thing they wanted to talk about was like you as a person. Like they were really just interested in getting to know you and understanding kind of like what motivates you. Um, what do you care about? Like, and also the team dynamics, right? Team dynamics are really important for LPs because the biggest risk LPs take is like if we as a fund kind of break up and there's like internal issues and misalignment. And so I think kind of the strength of our team, and so we've been together, I've been obviously a part of the team for 5 years, but like there's a lot of like connectivity between the partners and other folks in the team. And we've, everyone's been inspired and stayed inspired forever. And so I think seeing that kind of longevity um, kind of speaks to our culture, which I think is like really kind of top of mind when LPs are evaluating these early stage funds because, again, you don't have much to look at, right? Because it's still so early from a returns perspective.
For sure. In terms of like, sourcing the deals that you are looking at, I guess you mentioned about a couple sectors, for example, healthcare or like other sectors, like or like AI. Obviously, everybody looking at AI, and I know that you mentioned you guys are not really like following trends or like just like being really heavy on trends. I wonder what's your like day to day like when it comes to like filtering out the like deals in terms of like
Yeah,
I guess there's like two part of the question. One part is like, okay, so let's call it like the inbound deals and then there's like the outbound deals. So
yeah,
do you spend, let's call it like 50% of time on filtering the inbound deals and then 50% of time going out to source the deal for yourself, or like how do you kind of allocate your time, and how do you quickly filter out like the deals that are like not important?
yeah. No, it's a really good question. I mean, I think sourcing is the most important part of this job. It's, you're only as good as your next deal type of thing. Like, it's never over, right? You can pat yourself on the back after you did a deal, but then it's like, okay, like on to the next. And um, it's a thing that I think, everyone in venture is like most insecure about because you just never know what's out there that you don't know about. Um, so you're right. I mean, a lot of obviously deals come inbound from our networks, which include other venture funds, mostly funds that like kind of do like pre-seed that are like earlier than us and who are, passing along deals that are kind of maturing into the seed and series A phase. And then obviously some deals come via our founders and their networks, which is awesome. And we love to see that. And then of course you have things outbound, and that's typically like I would say more thesis driven, more kind of, it takes a kind of a little bit more of a sleuthiness to find those. I think both are equally important. Don't get me wrong. Obviously, if you're going outbound, you know, you, I go outbound a lot, and I think it's really an important muscle to build. Just to kind of like get a founder's attention on LinkedIn
Mhm.
or finding their email or something like that. And I think the most important thing there is like really personalizing the email and kind of explaining in the email like why you're interested in meeting them. And so I typically, before I do an outbound, I will like filter the deal based on their website or based on the founder profile and like where he or she came from. And so I do that kind of filter up front. And then to your point on stuff that comes inbound, like, you know, it's really important to your time is just your most important asset. And so I generally try to cast a wider net and take more meetings and less, because I find that like so much of this world is really like hearing the founder's vision themselves and hearing them tell their story, and that's so important. Um, so I tend to take more than maybe other folks do. But typically you'll kind of know within the first 5 minutes if this is going to be interesting. And so that's what this, you know, you're kissing a lot of frogs in a lot of ways. But like it's pretty clear within the first 5 minutes if something's interesting. And like, to give you a sense, you know, my goal is like I will try to meet somewhere between 10 to 15 companies a week. So it's like over 300 companies a year. On top of that, there's probably an additional 2 to 300 companies that come in that I pass on straight out because of whatever reason. So like, you know, 600 plus companies that I personally am seeing a year. And then of that, you know, maybe I will invest in 4. So it really you really, something really has to spike for you to get excited about it, because our model is like we're investing as a team, we're investing in about 10 companies a year, and me individually probably invest somewhere between 3 and 4. So it's something you learn over time. And I think the last thing I'll say on this is like, I remember when I started at NEA and I met the first company I met, was this company called Quip, which maybe people know. It's like kind of like the direct to consumer toothbrush company that was like your toothbrush on subscription. And I just remember meeting it, and it was the first company I met, and it was like I was kind of like, oh, that's cool, like that's interesting, like, you know. And so I think a lot, it's very common for, you know, people who are newer to venture to be kind of like you know, really flashy eyes and thinking like, oh wow, everything's great, and then quickly over time you like are really jaded and like everything's bad. And so I think it's important to take that balance of like, after you've been in venture for so long, to be able to look at things that like you might have rolled your eyes at because it's a category that like like, for example, ad tech, like a lot of people just like hate ad tech, right? But like, is there a new take on ad tech? Like, should I be excited about it? So I think it's important to like keep that level of curiosity, even if, you know, you've maybe written off a category because you've seen so many dead bodies in a certain space in the past.
I wonder, so like among the best deals, we don't have to go into details on which deal there, but like let's talk about like let's say like, the best deals that you have invested, were
Yeah.
they coming from like you go outbound? So like I guess like also like I want to kind of like dive deeper into the outbound model, because like I guess number one is like where would you look for these company? Is that like
Yeah.
for like a trusted advisor or like trusted investor who you have like, or like trusted people in your network who is like an expert in, let's say, AI or something like that, they have thought highly of like a particular company that they have seen? Or would it be more of like, okay, you read a research paper and then you're like, this guy, I want to hunt on this guy? Or
Yeah.
would it be like you go to an event that's like maybe an AI conference or like AI small, like I don't know, events meetup or whatever, then you're like, okay, this idea sounds interesting, and then you go outbound. Or like, what's your outbound like
All of those.
typical?
I mean, I would say examples include everything you just said. It's like reading an article and there's a company mentioned in it that's quoted out, and that sounds interesting, I'll outbound to them. I am at a dinner and someone talks is like, oh, this founder is incredible, I love this company. I will kind of save it in my phone and then outbound to them.
Mhm,
um I a lot of things are just like, honestly, because I do so much in like consumer tech,
mhm.
some of it's just like literally like being a, you know,
User.
user of the internet, right? and someone who has like seen and observed things online and trends,
Mhm.
and thinking like and like I've so that's happened a lot of times to me where I've been like, wow, this product is really amazing. Like, who's the founder? How much have they raised? Like, outbound. So it can come in all of those forms. And then sometimes it's like, I mean, I'm sure you've seen the thousands of people on LinkedIn where it's like stealth new co and their
Mhm.
background is something really impressive and it's like an outbound, like, so it's all of those things. And there's not, and the annoying thing about it is it's like not something that you can like do programmatically. Like, you really it's kind of, it's very bespoke, um
Mhm.
and kind of random. And I think the biggest like learning about this job, to be honest, is it's like so much of this job is serendipity. Like, it's literally like I can point to so many examples of this in so many ways, but like, a lot of the deals that I've done in the past like have come through various channels, right? And then if you think back to like, okay, this deal came from this person. How did I meet that person? Okay, well, I went to some random happy hour 2 years ago and met that person standing at the bar. Like, and if I hadn't done that, I might not be seeing this deal. And so that's why this job is like kind of confusing and hard, because it's like you're doing things now to hopefully pay dividends in the future. Um, and so that like, it can be a little tricky, but also just like such a good reminder to just like constantly like keep on expanding your network um and growing it.
Okay, so I think what you said is amazing. I can totally relate, but I wonder, how do you diligence these people's company? Because or like, okay, so there's two part of the question. One part is like, I guess like there's like a major yeah, like how do you kind of like, even the company that you chase and then like eventually you're like, no, I don't want to invest in this company. How do you like navigate the awkward situation of like, okay, this is amazing, and then we have went into like a very deep conversation, they have shared their client base, but you're like, in the end this is like not a fit for your fund. How do you
Yeah.
kind of like gracefully say no to that person and like
Yeah.
not let them take it personally? And I mean, also stop at this question. I have like a piggyback question.
Yeah. No, it's a really great question, and it's important because it's like I said, I'm meeting probably 3 to 400 companies a year, and I'm investing in 3 to 4, so, like, I'm saying no a lot. And I think at Inspired and, like, what I personally try to do is I try to get to a no quickly, right? So if I know from the first 5 minutes of a call that, like, it's not gonna be a fit, I try to just say that, like, within the next couple of days of just, like, or even on the call, I can say, "You know what?
Mhm.
For a variety of reasons, this is not a fit for us." Because as someone who also works with founders on the other side, like a lot of founders I work with are fundraising for their series B and C and beyond. And so I see their kind of side of things and like how they get frustrated when investors string them along and ask for the data room and ask for all these requests when like they ultimately know they're not going to get there. Like, it's a waste of the founder's time, it's a waste of my time. It doesn't make any sense. So for the most part, like a big kind of like principle of Inspired is like get to know quickly and don't waste a founder's time. So that's one part of it. The other part of it is like there are a handful of companies that are super compelling and
Mhm.
like really do get to the finish line, and then you have to say no, and those are by far the hardest conversations. And I think, what has been helpful to me in the past, and then there's an example of a company that we haven't disclosed our investment in it, but I met the founder 5 years ago. Like, did extreme diligence on the company. They came in to present to our investment team. He ended up selling his company for $150 million, and we stayed in close touch. And so when he came to raise his pre-seed, he came to me first and was like, "I want you in my round." So like, it's important because that like if it's not this company, maybe it's the next company. And so maintaining that relationship with founders is super important. And so what I like to do when we get very, very close, and this means like, if we've done a customer call, and that is like a super
Mhm.
sensitive thing for founders, understandably, I like to just be really transparent, right? And just say like, listen, these are the like one or two things that like we're hung up on.
Mhm.
Sometimes I even share my memo with them, and I'm like, "This is, like, all the work we've done on your business, like, I hope this helps you understand kind of, like, how investors are thinking about it." So that's one thing. I try to, like, share our work and, like, also, like, add value from a introduction perspective and saying, like, "Hey, like, we talked to these 4 people about your business. Would you like to talk to them?" And then the other thing is, like, oftentimes, like, there are companies that are just, like I said, on the fence, and so I then, will then kind of text, like, 4 or 5 of my closest friends in venture and say, like, "Hey, like, this is a really solid company, like, we couldn't get there for this kind of, like, one issue, like, but I think you should take a look at it." Um, and so so that's another way, obviously, to, like, help the founder. I think sometimes the tricky part is, like, and this happens quite a lot, is, like, disagreement over, the founder and, like, like, some people thinking, like, this person is really just gonna, like, take the hill and, like, is the person to build a multi-billion dollar business, and then some people saying, like, "I don't know, there's something about that person that, like, doesn't strike me as super ambitious," and, like, those are questions that you just can't answer, right? It's just, like, questions like, do you feel something about someone? And so those are, like, sometimes the toughest decisions, because it's not necessarily about the business, it's more personal.
Okay, so I have so many questions there. I guess like when you're doing diligence for these deals, obviously your check size is like pretty decently like big in like the seed
Yeah.
or like world basically. I wonder what does a diligence process look like for you? Do you have like a checklist of like, okay, here's like 5 thing I'm like I cannot really like move on, and there's like the 5 thing that's nice to have.
Yeah, so I mean, obviously, this is gonna look really different for seed versus Series A. So the diligence we do at seed is, like, I would say more market driven, more people driven, because there isn't a ton of data to look at. And then diligence for Series A is you're looking at the data, you're looking at the numbers, you're understanding kind of customer feedback, all of that. Um, so I would say, like, I would bifurcate those 2, and then on the kind of Series A side, which is, like, a more intensive diligence process, I think it obviously depends on, like, kind of the category the company's in, right? But, like, we kind of weigh customer, feedback a lot, and we do a lot of kind of, like, off the book diligence calls. So, we are consulting with various experts in the space, both within our network and like within kind of like a TGIS network, for example. Um, and then, I think there are other things that, we care about, like, for example, in consumer businesses, right? Like, one of the things I really look for is like, what does the word of mouth look like here? Like, what is the organic kind of behavior here? Because that's a really good sign that, like, this business is growing kind of on its own. And so, if you fuel kind of like capital into the business, it just like really could take off. Um, and then I would say, really understanding kind of the founder's vision and kind of where they see the business 5 to 10 years from now. Because again, like, we're looking to invest in companies that can be public businesses, and so feeling aligned to where they want to take that is really important.
I wonder what about like so okay, so you mentioned like, consult like the, you know, advisors in your network or TIGAs. So TIGAs like will just set it aside because that's like a, professional anonymous, all that. But
Yeah.
like let's say like if in your network this like tier one AI professor somewhere and then you're trying to ask them for advice, um like number one, like how do you make sure something it's like the way that you ask it's, like, confidential? Because sometimes I'm like, "What if, like, 6 other people also ask this guy?" And, like, would that be, like, a issue? And, like, also, like, the other thing is, like, what would you ask the advisors? Like, would it be like, "Do you think this thing has a technical mode?" Or, like, do you feel like there is more I guess, like I guess it really depends on who is the advisor, obviously. Like, if you're asking for, like, a Fortune 500 executive to see if they will become customer, that's a different thing. But I wonder, like, what's your thought process on, like, what kind of, like, things that you're trying to get out of the conversation from the advisors in your network?
Yeah, I mean, I think, this is, like, an important statement just about, like, investing in general, which is that there are a lot of reasons, like, not to invest in a company, right? Like,
Mhm.
there are dozens of reasons not to invest in a company. You can always talk yourself out of investing in a company because it's so early stage, like, no one knows anything. So I think what we really try to do is we try to, like, distill things down to, like, 1 or 2 questions. So, yeah, you could get distracted by the fact that, like, this one customer churned last year and whatever. Like, you can just get distracted by a bunch of different facts, but I think what we really try to do is say, like, what are the core things that we need to believe in order for this company to be a really successful company? And so we try to focus all of our effort and energy around those things. So, for example, like, there was a company we invested in healthcare recently that hasn't been announced, but, like, one of the core questions there was like, do we think that payers will ultimately cover this one type of service? And, like, if we do, if we believe that, if we feel confident in that, and we speak to people who maybe work at Aetna or Anthem or whatnot, and also believe that, that de-risks this belief, and therefore we feel, like, confident in this decision to invest. So it's things like that, I think, are important because you don't wanna get distracted in kind of things that are irrelevant, right?
Totally. But I think, like, the thing about the core things, I think the core things is always, like, can they get customer? Like, I think that would be number 1 on my list of, like, a successful business or not kind of category of things. And I wonder in terms of, like, if someone who will get customer at the very early stage, call it like a seed or something, I think the product, like, basically everything about the team can change drastically. Um, like, I guess, like, what would be like, can you maybe, like, unpack a little bit about, like, the core things? What would be, like, a core things that, like, you know, it's important for, let's say, this team to get customer or, like, because they're at this stage of, like, not at this stage, but, like, at the seed stage of a company, the product is probably very, very early.
Yeah,
The people on the team is very maybe unstable, as you just mentioned, like, people getting to Series B or something and still have a co-founder fight or something,
yep,
and then there is, just, like, so much unknown. Um, I guess, like, how do you kind of like, would you bet on, like, the people with, like, an industry experience more, or would you bet on, like, the people who are, like, just out of school, but, like, actually just, like, didn't really do much, but they're, like, just very passionate about the
totally.
technology or something?
It's such a good question and something that we debate a lot internally, like, um, I think Alexa on my team talks about it, like, you can invest in, like, freshmen, sophomore, juniors, or seniors. Freshmen are people who are, like, really green, maybe just got out of college, don't have any experience, but, like, really hungry. Sophomores might be people who, like, spent 2 years consulting or working at an investment bank or working at a startup and are starting a business. Seniors are, like, obviously people maybe who had exited a company before, like, um, and so we've invested in a number of, like, all of those things. So we've invested in
Mhm.
freshmen, people who are just, like, super eager, and then we've also invested in people who've exited companies before and have more security, and I think it's a really interesting dynamic, because I can't really say what's better because I've seen, obviously we've seen folks that have exited companies before and are coming back to do their second thing, and they can just move that much faster, right? Because
Mhm.
they know there's so many shortcuts they can take because they know, like, how to do the early stage thing, and they know exactly who they wanna hire, and they know how to set up the different internal systems that they need, and they just can go. And you're paying up for that too, right, as an investor, like, you're paying a premium for that. I think where you fall into a bit of a trap sometimes, and this doesn't always happen, and this is why you have to be really careful for it, are the people who are coming back to do it again, but, like, don't have the ambition. Like, they made some money in their last company, and they're kind of just, like, not going for it in the same way where, like, someone who has a lot more to prove has to go for it. Um, so I think there's a little bit of this kind of, like, we look for founders that have chips on their shoulders.
Mhm.
So people who are, like, just and maybe that for second-time founder, that's like, wow, they just felt like they didn't get the outcome they wanted, for example.
Mhm.
Um, so I think when it comes to, like, experience or lack thereof, I think we're, like, looking for people who have demonstrated, an ability to kind of, in their life, like, gone through something, like, pretty challenging, and that can either be, like, in a personal perspective, in a professional perspective, like, um so those are the kind of the unifying factors versus, like, we don't have, like, a hard and fast rule around, like, "Oh, we only invest in repeat founders," or, "We only invest in people who are, like, older than 30." Like, that doesn't factor in for us. It's really more of a judgment on the person and kind of what's motivating them, I think is what's really important.
Um, when it comes to, like, the investing side of things, let's talk about, like, evaluation. Is there, like, a certain level of valuation that it would be your cut-off line for the seed? Um, and in terms of, like, thinking about, like, other investors on the cap table, I guess, like, if there's any kind of particular things that you would look for, let's say, call it, like, signs of, like, would they be able to, like, raise the next round of funding that, like, you would be, I guess, like, paying attention to? Like, what are some signs that you feel like, "Okay, so, like, if we invest in this company, they have, like, a really great chance of, getting the next round of funding?"
Yeah, no, it's a good question. I would say on the valuation piece, like, valuations are all over the place these days, and I think it's unfortunate in the sense that, like, you know, a lot of valuation is really just, like, determined by how much you're raising, right? So it's like if you're raising, $5,000,000, most investors are like, "Okay, that person probably wants a $25,000,000 valuation because you probably aren't taking more than 20% dilution." And so that's kind of how people back into valuation, and so it's one of those things where it's like we see this dichotomy between, like, someone who worked at Palantir for 5 years is leaving and is a team of 1, doesn't have a pitch deck, but is out raising 5,000,000 at a $25,000,000 valuation, no product, versus, another company that maybe has a few customers but has been like, doesn't have that background and is raising a $3,000,000 seed and looking for, like, a $12,000,000 valuation, even though they have traction and revenue and all those things, and so it's kind of meaningless in a way, and so seed, I think, is a really tricky place to play right now because these valuations are, like, all over the place, and a lot of companies have, like, done themselves a disservice by, like, overvaluing them and, like, focusing so much on valuation at the seed and not realizing that, like, slow and steady kind of is, like, ultimately gonna win the race here, and you're just setting yourself up for, like, potentially a challenging next round if, like, you can't kind of can't clear the last price. Um, so that's what I would say on valuation. And then in terms of kind of thinking about, like, can this company raise a follow-on round? I think, we're more focused on, like, fundamentals of the business. Like, we care more about, like, are you building a strong business? Are you building a good product? All of that will come, the funding, whatever. In fact, like, I'm more turned off by the founders who are, like, super, like, obsessed with fundraising, I guess is a way to put it. Like, there obviously is an important element of fundraising, is it's like being a good fundraiser is, like, table stakes. You have to be able to be a good fundraiser and tell your story well. But those founders who are like constantly raising and constantly just like pushing valuations higher and higher, I think are not the founders that we really want to back. Um, because I think sometimes they like lose sight of like, what are we building value for? Like, you sometimes people seem to care more about that like valuation number versus like the fundamentals of the business, and like, do they have revenue? Do you have customers who like your product? Like really basic things. And then what happens is sometimes it all comes off the wheels when all of a sudden, the hype around a company disappears, and it's like the company it's like kind of naked almost, and it like comes out that like a lot of customers have churned, and there's no way someone's going to price it at the last valuation. And then you get into the whole messiness of down rounds and recaps and all of that.
I wonder, do you have like, I don't know, like a couple more minutes? I
Yeah,
wanna
sure.
Okay, perfect. So I will end with one real question and then a 1 minute fire round for you. So,
Great.
a real question would be like when you are trying to, you mentioned about like, let's say call it like an ex volunteer or ex like founder from somewhere. I guess like what would be the approach of like, monitoring the, key employee of a famous unicorn or something, versus like um having your pause on like, I guess, oh, okay, let's just stop there. Maybe like how do you filter out like who would be a good founder among the people who are leaving like a big company or like big unicorn to actually start their own company?
Yeah, no, I mean, it's a great question. I would say, like, I think this is where kind of references come in, right? And so we especially when we're investing like what we call pre-seed, so this is like pre-product, pre-customers, like pre-launch, all of that. It becomes really important to just understand what that person is like in a company. And I think qualities that we like to see, people who like don't take no for an answer, people who run through walls, people who push the team to do more, people who like move really quickly. All of those things are characteristics of someone who I think would be a good founder. Um, and I think sometimes it's like, a little bit tricky when people come from like shiny big companies because there is a little bit of like safety in that. And you really, want someone obviously who can like do the 0 to 1 phase and has like startup DNA. Um, so that's something else that we will try to suss out, right? Just because you spent 10 years at Uber, like doesn't make you like a good fit to be like a 0 to 1 founder. So that is something that we care about.
Totally. Okay, so I have a quick 1 minute fire round for you.
Great.
What's your favorite book?
Oh my God, my favorite book. I really liked the Steve Jobs biography by Walter
Biography?
Isaacson. Yeah.
Nice. Who made the biggest impact in your career?
Um, I would have to say Alexa.
Who would you invite to your dinner party?
Who did I invite to my dinner party? Kim Kardashian.
Oh my god, that's such an iconic answer. I'll invite Taylor Swift. I'm just kidding. Where can we find you outside of work?
With my almost 3-year-old daughter.
Oh, congratulations on her, graduation from
Yes,
high school.
yes, from
Uh,
first grade school.
Amazing. Okay, so quickly saying hi to the audience. Hi, Nikhil. Hi, LinkedIn user. Assuming that's Stacy. I don't know. Anyway, hi. Well, thank you so much, Charlotte, for coming on the show today. It was such a
Yeah,
fun.
thanks so much, Grace. This was so fun. Thank you for having me.
Let me quickly end stream.